Wondering how to pick up the pace to achieve the retirement or financial freedom that you want? Wondering if you're taking full advantage of every opportunity to get to the retirement that you deserve faster? Today we'll identify and explain 3 opportunities maximizing retirement plans, Roth conversions, and health savings accounts that are often available but are also often not being well utilized. Watch until the end of this video and get ideas and inspiration to achieve your retirement success faster. So Jimmy, thank you very much for being with us today on Wealth Matters for Physicians.
Sure, thank you for having me, Mike.
So today we're discussing 3 timely opportunities to help you get to retirement success faster. So the first opportunity we want to talk about is supercharging your retirement plans. Now everyone knows about retirement plans, but what specifically do you want our physician audience to know so that they're taking maximum advantage and fully supercharging their retirement plans?
Sure. What's important is to really know what options are available to you. So if you're a physician that either owns your own practice or maybe you do some consulting work or any kind of income where you're getting a 1099 level of income, you want to start looking at self-employed plans. So these are things like SEP IRAs, individual 401ks, defined benefit, defined contribution plans. All of those allow you to put in a much larger amount into retirement savings than you would through a traditional ordinary individual IRA or even a Roth IRA. So making sure that those plans and what can work with you, depending on, again, your type of practice, if you work with others, if you work with a spouse, talking to an accountant or a tax and investment planner can help you find out the best one. But the key thing is you can get a lot more into those types of plans than you would otherwise through traditional means. And one of the biggest benefits is the more you can get into a lot of these plans, it actually will bring down your current year tax bill, which every physician I talk to always wants to try and save on taxes, especially in their peak earning years. The other option is if you're a W-2 employee. So whether you work as an employee within a group, if you work with a hospital or university, what's key there is to really understand what benefit plans are available to you. So I know back from when physicians might have started 15, 20 years ago, there was kind of just the plan and that's what you could go with. But understanding, do you have an option to do a traditional plan or a Roth plan, whether you are making sure you're doing that catch-up contribution if you're over 50 is important, and to see if there's some of the newer options like being able to do after-tax contributions to a plan, which can actually allow certain individuals to do something like a mega backdoor Roth. So again, it's allowing you to get more and more assets into these retirement buckets, which on the one hand usually bring down your taxes in the year that you make them, and 2, get them into these tax-preferred vehicles that aren't taxed on a yearly basis and are able to grow at a higher rate than, let's say, an individual brokerage account.
Great. And the last thing, I think everyone knows this, but always put in at least as much to get the full company match.
Absolutely.
Pausing here to thank you for watching Wealth Matters for Physicians by Altfest Personal Wealth Management, the channel that provides physicians with key investing and personal financial planning strategies. For over 40 years, physicians have relied on Altfest to help them achieve the financial independence and future they deserve. If you're wondering or concerned about your finances, let's talk and see if we might be able to help. And now back to the show. So the second opportunity that often we feel are not being fully utilized by physicians are Roth conversions. So let's just take it from the top briefly. What is a Roth conversion?
Sure. So I had mentioned Roth accounts on my previous point. A Roth IRA is an IRA where taxes are paid before money goes in. It's allowed to grow tax-free. And as long as the money stays in the account, you never have to pay taxes on it again. As opposed to your traditional where you don't pay taxes, you let it grow, you pay your taxes on the back end. When you're converting, you're actually taking a chunk of those traditional pre-tax assets, taking them out, you get hit with the taxes, and then you're able to put the amount into a Roth IRA. So typically when we're talking about a conversion rather than a contribution, you're able to put a lot of money into that Roth bucket at a certain point of time. So you can be very tactical with moving assets from this pre-tax bucket to an after-tax or post-tax bucket.
Great. So Jimmy, just very bluntly, what are the benefits of Roth conversions? What should physicians really be focused on when determining about whether a Roth conversion makes sense?
Sure. So a Roth conversion allows you to be very targeted on when and to a degree of how much you pay in taxes. So really what you're looking at is, do you want to pay taxes now or later? And it's finding that right place so you can ideally pay the lowest taxes that are possible.
Right, and so the thing is, right, if you're in a high tax bracket now, you might not want to pay taxes now because you might think you're going to be in a lower tax bracket later, like in retirement. And vice versa, some of our young physician clients who aren't making too much now might want to pay taxes up front so that they can avoid paying taxes later.
Exactly.
So actually, Jimmy, I apologize because I think it just stole some of your thunder, but can you give some specific examples of when physicians might be in higher tax brackets versus lower tax brackets to identify the times to convert or not convert?
Sure. And to the point when you said, I think traditional thought processes that are out there are, if you're early in your career, you might be in a lower tax bracket. So again, you can put money into the Roth then or do a conversion. If you're in your peak earning years, well, you'll probably be making less money down the road, you'll be in a lower tax bracket, so do your Roth conversions then. And that's not bad, but one of the things that we really like to take a look at, and what I find to be particularly the case with our physician clients, and actually I have a slide on here to look at, is that there can be some times where it's really a good tactical time to make those conversions. So for instance, if you're looking here, we'll see physicians that commonly either, one spouse might stop working or you scale down to half time. So you're already in a lower tax bracket and it's a good time to maybe do some conversions. And for others, when we're doing things such as Social Security planning and deferring Social Security benefits to later where they boost up, you can actually be in a period of time where you have little to no taxes coming in. And what you can do there is make some fairly large conversions from your pre-tax traditional IRAs into a Roth IRA. And here's where I think a lot of people don't have as much insight into what can happen, because with your traditional IRAs or 401ks, 403bs, once you stop working, once you're in your mid-70s, the IRS is going to force you to start taking required minimum distributions. And as you can see from this chart, the tax liability is actually going up when you get into your 80s and 90s. And what's happening there is that great retirement savings that you've built up is now forcibly being pushed out by the IRS, and you're having to pay quite high tax rates. In some cases, you can even have higher tax rates than when you did when you were working. So by transitioning and converting from a traditional to a Roth, you can lessen the amount that it is going to be forced out through these required distributions. And what is even better is that there's no requirement on Roth assets. So you can allow those to really sit in that preferred Roth account and build up over time. You never have to pay taxes and you get to keep them in there for longer.
Great, and so just re-emphasizing what you were saying is that many physicians aren't thinking about what are the times that, let's say they've retired, but they haven't started taking Social Security yet, and they haven't started taking required minimum distributions yet, so they're in an artificially low tax environment. That could be a great time to do some partial Roth conversions. Or, like, for example, maybe they're taking a sabbatical or a hiatus. They're taking like a year off. That would be a perfect time to do a Roth conversion.
Absolutely.
Lastly, let's talk about the opportunity of health savings accounts. So first question is, what is a health savings account?
Sure. So a health savings account is a specifically designed account through the tax code that allows you to put money in tax-free. It gets to grow tax-free while it's in there. You can carry it over from year to year. And as long as the money from that account is spent on a qualified medical expense, it never gets taxed. So we always say the unique thing about this, it's the only designated account out there that is triple tax-free.
Wow, that's amazing. Triple tax-free. No tax going in, no tax on the growth, no tax coming out if it's used for qualified medical expenses.
Exactly.
Excellent. So, well, actually, you talked about the benefits already, and that was my next question, but I know that another thing that we could talk about briefly is that you can carry it over from year to year, it can grow, and let's say it gets very big and you're very lucky, you don't have many health expenses, you can take it out, right? But of course you'd pay the tax on when it comes out if it's used for non-qualified medical expenses.
Yeah, so this is one of those areas that, especially with, I think, physicians that have a good understanding of what healthcare costs can be, and they're earning enough that they're able to cover a lot of standard expenses that come through, is really taking a look at a health savings account more than just a year-to-year helpful tool, and almost have it be an extension of your retirement planning in one of two ways. As you had mentioned, if you do build up a large health savings account and you have too much more that you may not use for medical expenses, one of the advantages of it is you can actually take some of those distributions out once you're over 65, and they're treated almost like traditional IRA assets. So you're, again, almost getting additional tax and retirement savings through it. One of the other items that I think is very powerful, and especially I talk to a lot of young physicians about this, is that you can actually look at it as being part of almost like a long-term care planning, because a lot of people worry about these big rising healthcare costs that can come up and creep up down the line. Having a health savings account is almost a way of partially funding some of your own potential care that you might need, whether it's true long-term care or just expensive health needs that may come up as you get older. So looking at it long-term, I think you can take this, more kind of run-of-the-mill health savings item that's available and really kind of leverage it to its full potential.
Excellent. We definitely want physicians to lead by good example and make the most of these health savings accounts.
That's right.
So great. So who is eligible to have one? How do you know if you can get one or not?
So this is a good point. So not everyone can just go and contribute to a health savings account. You have to have a high deductible health insurance plan in order to be able to make that contribution. So that is key. You have to, there are special IRS limits, so you can check either with your plan or with your employer to see. Most of them will say it is a high deductible plan, and if that is the case, then you are eligible to make a contribution to a health savings account.
Great, and if you're eligible, then how would you go about getting one set up for you?
Sure. So the first step, especially if you are employed and you're not self-employed, is to ask your employer typical HR benefits. So just like your 401k, 403b, ask about health savings plan options and what you can contribute if you qualify. If you're self-employed, such as you run your own practice and you know you have a high deductible plan for yourself, you can talk with custodians, such the kind of major ones out there, to see if you can open a specific health savings account with them, and you can start putting assets into it. Many, it's just kind of a cash balance, but if it does grow, many custodians allow you to actually invest those proceeds into something other than cash, into something that can grow long term.
So, well, that's all the time we have today for discussing timely opportunities to help to get to retirement success faster. Jimmy, thank you very much for being with us today on Wealth Matters for Physician. I think you've given some really good retirement turbocharging tips to help our physicians.
Well, thank you. I'm happy to be here. Happy to share what I know to hopefully help some of those out there really get in the best position they can possibly be.
If you'd like to discuss the information explained in today's video, receive a complimentary review of your investment portfolio or a retirement readiness analysis, or discuss any other personal financial planning area with an Altfest professional at no obligation, please contact my colleague Jesse Freeling at 212-796-8732, or by emailing Jesse at his email address, which is also in the description of today's video. If you like today's video, please click the subscribe button below and hit the bell icon to receive notifications each time we release a new one. If you think that a fellow physician would find this video either interesting or useful, please feel free to share it with him or her to help them strengthen their finances. Lastly, as always, if you have topics you'd like us to cover, like or dislike certain things that we're doing, or have any other feedback, we'd love to hear from you. So please give us your comments in the comments section below. Well, that's all for now, physicians. Thank you very, very much for being with us in today's video, and I look forward to being with you in our next one. Until then, be well, and remember to continuously optimize your finances, or let us help you if you'd like.